All right, so if you're a swing trader, you totally know this feeling. You see an amazing trend, it starts to pull back, and you're just stuck there wondering, is this the moment? Is this the perfect time to get in? Well, today we're going to break down a really simple, objective strategy that's designed to take all of that guesswork out of the picture. So let's just dive right in.
You know, any trader who loves to ride a good trend runs into the exact same problem. The market's moving, you feel like you've missed that first big push, and now you're just waiting for that perfect, low-risk spot to hop on during a pullback. But that's exactly where all the uncertainty starts to creep in.
I mean, this is the big question, isn't it? If you jump in too early, the pullback might keep on pulling back and you're immediately underwater. But if you wait too long, you could miss the move completely. It really feels like a guessing game, but I'm telling you, it doesn't have to be.
So this right here breaks down the two big traps. On one side, you've got the shallow retracement. It looks so tempting, right? It sucks you in, but then it just fails. Because it wasn't a real pause, it was actually a sign of weakness. And then on the other side, you have a really deep retracement, which can be even more dangerous. You think you're buying the dip, getting a bargain, but what you're really doing is catching the very beginning of a full-blown reversal. Both of these are just costly, frustrating mistakes.
So how do we find that sweet spot? You know, that perfect middle ground between too shallow and way too deep? Well, this is where the 50% retracement comes into play. It's a clear, objective tool that helps us cut through the noise with a simple, rules-based approach.
Now, let's be really clear about this. 50% isn't some magic number that controls the market, but it works so often because it's a huge psychological level. Think about it. It's the point where all the people who bought the very top start to really feel the pain, and at the same time, traders who took profits early are looking at it as a great spot to get back in. Even trading algorithms are often programmed to react around this halfway point, which kind of creates this self-fulfilling prophecy. It just makes it a fantastic, common-sense benchmark for a healthy pullback.
All right, let's get into the nitty-gritty. How do we actually trade this? We're going to walk through the simple, step-by-step rules, and we'll start with a bullish or a long trade.
The rules are super straightforward. First, you need a big, powerful move, a strong price thrust that breaks above a recent peak. That's your anchor. Second, you just draw a zone between the 50% and 61.8% levels of that entire move. Third, and this is the hardest part, you have to be patient. You just wait for the price to drift back down into your zone. And finally, your entry signal is a sign of strength, a bullish bar, which is just any candle that closes higher than it opened that forms right inside that zone. That's your green light.
And here it is, playing out perfectly on a chart. See at point 1? That's our strong, impulsive move up. Based on that thrust, we draw our zone at point 2. Then you see the price pulls back at point 3, right into our zone, and it finds support. The trigger to get in is that big bullish bar at point 4, telling us the buyers are stepping back in. I mean, it's a textbook example.
And of course, this whole thing works just the same, but in reverse if you're looking to short the market. You're looking for a powerful move down that breaks a recent low, you mark your 50% zone, you wait for the price to rally back up into it, and then you enter on a clear sign of weakness, like a big bearish bar.
Okay, this comparison right here really gets to the heart of the whole strategy. On the left, that winning trade kicked off with a really powerful high momentum thrust. But look at the right, at the losing trade. The initial move was kind of weak and choppy, and because of that, the zone just didn't hold and the trade failed.
So, here's the absolute crucial point. Not all price moves are created equal. The success of this entire strategy hinges on the quality of that first move. If you start with a weak, choppy thrust, you're going to get an unreliable zone. Simple as that. A powerful, decisive thrust is what creates a high probability setup. So your number one job is to be picky about this.
Okay, so we've covered the standard swing trades. That's great. But what if we want to get a little more advanced? What if we want to catch the very beginning of a massive new trend? Well, we can actually adapt this same logic to trade major reversals.
Now, to do this, we need a guidepost, something to tell us what the major long-term trend is doing. And one of the best tools for that is the 200-period simple moving average, or the 200 SMA. Just think of it as our compass for spotting when a big trend might be getting exhausted and is maybe ready to turn around.
So here's how it starts. This chart shows a really clear bull trend, right? The price is staying way above that yellow 200 SMA line. For the longest time, there's no reason at all to think about a reversal. But then, look at point 3. The price finally drops all the way down to test the 200 SMA. That is our signal to go on high alert.
It's the first real sign that this major trend might be in trouble.
The steps for this reversal play are just as systematic. First, you identify that big, obvious trend. Second, you wait for that test of the 200 SMA. Third, and this part's key, you define what we'll call the anchor thrust. In this case, for a bull trend reversal, it's the move from the absolute peak of the trend down to where it first touches that 200 SMA. And finally, we project our 50% zone from that anchor thrust.
Let's look at this on the chart. Point 1 shows our anchor thrust, from the very peak down to that first touch of the 200 SMA. And based on that move, we project our 50% zone, which you can see at point 2. This zone now becomes the critical battleground. It's where we expect the old uptrend to try one last time and fail.
Okay, here's a really crucial detail. This zone is dynamic. It can move. If the price pushes even lower after that initial SMA test, it means our anchor thrust has gotten longer. So what do we have to do? We have to adjust our zone downwards. Here you can see the thrust extended a little bit, so we just moved the zone down to its final position at point 2. That is the zone we're going to use to look for our entry.
And here is the beautiful payoff. This chart shows a perfect bear trend reversal. The market was in a downtrend, it rallied up to test the 200 SMA, and we projected our zone. And look at point 3. The price pulls back perfectly into the zone and finds support. This gave us a fantastic low-risk entry to go long, and as you can see at point 5, it caught the very beginning of a powerful new bull market. This is the kind of high-reward potential we're talking about.
But let's be real. No strategy on earth works every single time. And being a professional trader isn't just about knowing when to get in. It's just as much about knowing when you're wrong and it's time to get out. A truly sound strategy has to include an invalidation method, a clear, unemotional signal that tells you to give up on the setup.
And this chart shows that invalidation in action. We had a potential reversal setup. Our zone was drawn, and we were expecting it to act as resistance. But look what happens at point 3. The market doesn't just test the zone, it gaps right through it and closes firmly above. That's it. That's our signal. The zone has failed, the setup is invalid, and we just cancel our expectation of a reversal. We step aside, no harm done, and we wait for the next opportunity.
So, as we start to wrap this up, what is the single most important skill you need to trade this strategy well? It's not some complicated analysis, it's not some secret indicator. It's actually something much, much simpler, but also a whole lot harder to master.
The absolute key is discipline. It's having the patience to wait for a truly powerful price thrust, not just any little move. And it's the patience to sit on your hands and do nothing while the price comes all the way back to your zone. If you chase the market because you're scared of missing out, you simply cannot execute this strategy. Your real edge comes from waiting, not from acting.
And that really brings us to the final and most important question. You now have the blueprint for an objective, rules-based strategy. The system itself is simple, but executing it is not. The only question left is, do you have the discipline to wait for your perfect setup? Because in trading, sometimes the most profitable action you can take is no action at all.